Welcome to Staff Works Explained. If it's your first time here or you have not subscribed to this channel, I encourage you to do so. Also watch other videos that we have done in the past. You can click on the notification bell so that whenever you upload a new video, you are notified. In today's video, we'll be talking about Ugandan SGR. This is a continuation of a series of SGR projects in the region. And in this video, we'll be talking about the sections of this SGR, the switching from a Chinese contractor to a Turkish company, the possible routes that are being considered. We'll talk about the Turkey and the Yapi Merkezi question, the finance models which are being explored, challenges that are facing the SGR, and the options which are available. Uganda, like other East African states, is planning to build a standard gauge railway which will link the country to its neighbors Kenya, Rwanda, DRC, South Sudan, and Tanzania. This is part of the East African Railway Master Plan. The new system is intended to replace the old inefficient meter gauge railway system. As per the sections of this SGR, there will be four. The first section is the Malaba-Kampala section. This section is also referred to as the Eastern Line, and it will stretch from the border with Kenya at Malaba town through Tororo, move to Jinja, and terminate at Kampala, which is the capital and the largest city in Uganda. The total distance of this section is approximately 219 kilometers. The second section is Tororo Gulu section. This is also referred to as the Northern Line, and it will extend from Tororo, go through Mbale, move to Lira and Gulu, and this is a distance of 367 kilometers. From Gulu, it will have a spur which will continue to the north to Elugu and on to Nimule and Juba in South Sudan. The section in Uganda measures approximately 106 kilometers. Another extension stretches from Gulu southwestwards through Pakwash and terminating at Goli, which is a border town with DRC, a distance of approximately 187 kilometers. The third section, the Kampala-Mpondwe section, is referred to as the Western Line. It starts at Kampala, passes through the Bihanga, and which is in Mbanda district, and continues to Mpondwe, which is at the border with the DRC, and this covers a distance of 430 kilometers. The fourth section is the Bihanga Mirama Hills section. This section is also referred to as Southwestern Line. It stretches from Bihanga through Ibanda and Barara to terminate at Mirama Hills, which is at the border with Rwanda, covering a distance of 191 kilometers. In terms of cost, the preliminary results for the whole Ugandan SGR project was quoted at 45.6 trillion Ugandan shillings. This is approximately 12.8 billion US dollars. The construction of this railway was initially expected to be financed by the government using borrowed money from the EXIM Bank of China. However, the loan has not been approved because of various reasons, and one of them is that the section that was to connect Kenyan and Ugandan SGR through Malaba has not been constructed. Kenya has constructed its railway up to Naivasha. There is a whole section from Naivasha through Kisumu to Malaba which has not been constructed. The government has not gotten funds for this part. It was expected that Chinese will provide funds, but they have not, due to what they call the viability. They have asked for a revised feasibility study before they commit themselves with the funding, and this may also be the reason why Chinese company was the China Harbour Engineering Company, CHEC, had initially committed to financing this project, but for the last 3 years they have been non-committal. Uganda has sent requests, but they have not been committed. Some reasons are being given. One of them is COVID-19, the viability of this project, and also the economic situation which is prevailing in the world, and particularly in China. And this has forced Uganda to start looking for alternatives. They want to build this railway, and the Chinese EXIM Bank is not committing itself to financing the project, so they are looking for options, and this has necessitated the switch from Chinese to a Turkish company. In January 2023, the government of Uganda formally terminated the 2.2 billion contract with the China Harbour Engineering Company, CHEC, after the EXIM Bank of China refused to provide the funding. This funding was for the first section from Malaba to Kampala. It was expected to cost $2.2 billion. The government of Uganda had given this contract to the CHEC, but the China EXIM Bank had not been committed on providing the funds which are required for the construction of this section. While announcing the termination of termination of this contract, a government official said that the Chinese company failed to implement in time agreed, and also the conditions that they set were not favorable to the government. The government then approached a Turkish company, Yapi Merkezi, which is constructing the Tanzania Section 1 and Section 2 and 3 phases, and they have signed a memorandum of understanding with this Turkish rail construction company, Yapi Merkezi, and they would use syndicated loans from export credit agencies to bankroll the project. The government is in discussion with a new Turkish partner with the aim of moving towards the final contract. No agreement has been made yet. They are still negotiating. The Turkish company is supposed to respond to these requests. The agreement, according to the officials, involves both technical and financial preparations. A government official said that Export-Import Bank of China had not responded to Uganda's latest request for funding for nearly 2 years after it was submitted. But the official said that previously they had such requests. The bank would respond quickly, but in this case they have delayed 2 years, exactly 2 years before they have provided feedback. So from the time of their last financing submission in February 2020, there have been no response. After the submission, the government says they have waited for a few months, and there have been silence since then, and still there is silence from EXIM Bank. So this has forced them to look for alternatives. The president, the president of Uganda, Kaguta Museveni, when he saw that this was not going to yield fruits, he gave order to his government officials to look for alternatives. So they started with the UK. Now they have gone to Yapi Merkezi of Turkey. Given that Kenya has to complete its section for the Uganda railway to take off, Uganda is also considering other options. Uganda is considering taking an alternative route to the coast through the southern neighbor Tanzania. This is where the Yapi Merkezi is already building railways, and this move, analyst says, that may turn the Kenyan SGR into a white elephant. Sometimes back, a decade ago, the East African states, Kenya, Uganda, Rwanda and South Sudan, they had agreed to build a high-speed SGR to carry freight from the Mombasa port to Juba through Malaba, Kampala, and to Kigali. There was commitment to get some 5 billion from China EXIM Bank to build the first phase of the railway, and this happened. and it has reached Naivasha, which is a town in central Rift Valley of Kenya. This was completed in 2017, but plans to extend the line to Balaba border so that Uganda can take off and have a seamless movement of goods has not. This plan has stalled. In 2018, China expressed reservation about the financial viability of this section, and it asked Kenya to come up with a new feasibility study before it could give the funds. Meanwhile, the Ugandan southern neighbor, Tanzania, is making very good progress in construction of its 2,561 kilometer rail network between the port of Dar es Salaam and Mwanza, which is in Lake Victoria. So Uganda can pick up from there and construct a railway which will connect with its town. Analysts say that Kenya Railway must reach landlocked Uganda, which imports many of its products through Mombasa, if it's to be commercially viable. But Kampala would be tempted by an alternative route to the coast through Tanzania, which was not part of the original plan of railway. There's also the Turkey and the Yapi Merkezi question. One of the most important Turkish firm has set foot in Africa. This is Yapi Merkezi. Arguably, the single most foreign investment by this company is the SGR in Tanzania. This company has constructed the first phase, Dar es Salaam to Morogoro, and then Morogoro to Makutupora, and some other sections this company is constructing, and the Tanzanians are happy about the progress that this company has made. And this company is one of the first companies to enter into this region. It has also built other projects, like in Uganda. The company has built an important road that has received much acclaim from the public and also from politicians. It is in this logic that Yapi Merkezi has been earmarked to take over the first phase of the Ugandan SGR. The government officials believe that this company has done a good job in terms of quality, and there is no doubt that they will finish the job on time and deliver the best quality. In terms of financing model, Yapi Merkezi is known for following a different approach to financing with the European market, or European export credit agencies play a major role in this. This is an approach that will come in handy for Kampala after China EXIM Bank seems reluctant to fund the project. The financing model for the project will also change, with Yapi Merkezi, which is building the SGR, is expected to tap into its network, and this probably will bring a new life to the project. Use of export credit agencies. These are government-backed institutions that provide financing and insurance to support construction of infrastructure projects. In this context, export credit agencies normally provide financing to help exporters and their home countries win contracts to supply goods and services for the projects in foreign countries. ECA or ECAs typically provide two types of financing for infrastructure projects. One is direct loan and export credit insurance. When we talk of direct loans, these are typically provided at below market interest rates and are intended to help exporters finance the export of goods and services to foreign buyers. When we talk of export credit insurance, on the other hand, these protect exporters from risks of non-payment by foreign buyers. When an exporter wants to bid for an infrastructure project in a foreign country, they will typically approach their ECA for financing support. The ECA will evaluate the exporter's financial standing and the viability of the project, and if the project is deemed viable, the export credit agencies may provide financing in the form of direct loan or export credit insurance. If the export credit If ECA provides a direct loan, the exporter will be required to pay the loan over a period of years, typically with interest. If the ECA provides export credit insurance, the export will pay a premium to the ECA in exchange for protection against the risk of non-payment for the foreign buyers. ECA can play a key role in financing this type of a project, as it will provide financing at lower interest rates than commercial lenders, and it will also help in mitigate the risk of non-payment by foreign buyers. However, ECA are typically only available to projects from countries that have such arrangements, and they may be subject to political consideration and can also complicate the financing process. There are examples of projects in Africa that have used this model. They have, as we know, export credit agencies have played significant role in financing the construction of several SGRs in Africa. SGRs, as you know, are a type of infrastructure that use wide track gauge than traditional railways, and these allow for faster and more efficient movement of goods. One example of an SGR that was financed through this model is the Nairobi Mombasa SGR. The project was financed in part by China EXIM Bank, which provided a direct loan to the Kenyan government. The loan was guaranteed by the Kenyan government, and it was insured by the China Export and Credit Insurance Corporation, Sinosure. And this is an ECA that is owned by the Chinese government. Another project is the Ethiopia-Djibouti Railway Project, which connects Ethiopia to the port of Djibouti. This project was also financed through from several ECAs. The project was partially funded by the African Development Bank and the World Bank, as well as export credit agencies from China, France, and Italy. The China EXIM Bank provided a significant portion of the financing, and the project was insured by Sinosure. So in general, ECAs have been attractive source of financing SGR projects in Africa, because they typically provide financing at lower interest rates and have a longer repayment terms than commercial lenders. Additionally, the many SGRs projects in Africa have been financed by the Chinese bank and ECAs as part of the China Belt Road Initiatives, which aims to expand infrastructure and trade links between China and other countries. However, there have been criticism of some SGR projects, including concern about their cost and economic viability, as well as environmental and social impact. The financing model that is proposed for the SGR project in Uganda is still under discussion, and there has been no definitive agreement on how the project will be funded. However, ECAs is one of the financing options that has been provided. There have been concern about the high levels of debts, and this is one of the concerns that probably will be considered when it comes to selecting of the model that will be used in financing this project. So generally, this project has been facing some challenges. One of them is funding, where Uganda has been struggling to secure funding for the SGR project. Now that China EXIM Bank has expressed reservation about its financial viability, there has been cancellation of a contract with the Chinese firm for the construction of this railway. Then there are cost concern. There have been political controversies in Uganda about the projected cost of the project, with parliamentary committee questioning the price tag of 2.2 billion. This was in 2017. There has also been concern about non-competitive bidding, and the fact that this project was a single-sourced project. There is also coordination with other projects. The SGR projects competes with the Tanzania railway project for the same cargo markets in Uganda and Rwanda and DRC. There better coordination between the two projects at the region level can help in ensuring that the project is economically feasible and becomes integrated in project designs at the regional level, and this could ensure that it is economically viable for all the East African states. There is a question of commercial viability. The long-term commercial viability of the SGR will depend on the region's overall economic growth, which will determine whether there is enough demand for both rail links. Operating on a segment of the railway line is hardly profitable, as you know. This cannot be enough to recoup the project's massive capital expenditure. There is a question of debt sustainability. We know that Uganda has exposure to Chinese creditors, particularly for the construction of the Karuma hydropower plant. This has raised concerns about debt sustainability. This may limit the country's option for securing funding for the construction of these projects. There are also several ecological concerns related to the construction of these SGR. One major concern is the potential impact on wildlife and the habitat, particularly in the national parks and reserves. The railway line may fragment habitats, disrupt migration routes, and increase human-wildlife conflict. And this leads to negative impacts on biodiversity conservation. It has been suggested that to address these concerns, the government of Uganda and the project implementers need to come up with a comprehensive environmental impact assessment and put in place effective measures to minimize negative impacts on the environment and ensure that there is sustainable development. Some of these may include measures such as wildlife corridors, bridges, control soil erosion, water management, handle relocation of people properly, and also use energy efficient solutions. So despite these challenges, Uganda still needs to move ahead with the SGR project, and it needs to do this urgently because this comes with a lot of benefits. Based on those challenges which the project is facing, the country has several options. One option is to continue with the current plan and attempt to secure funding from other sources such as international lenders or private investors. However, this may be difficult given the current economic climate and perception of the high risk which is associated to this project. Another option is to reconsider the route and consider an alternative route to the coast through Tanzania, where a rail network is already under construction at high gear. This could potentially provide more feasible and cost-effective option for Uganda, and it would require coordination and agreement with neighboring countries. But this will not be good for Kenya, since Kenya has had an agreement with Uganda to connect the railway from so that Uganda can be able to transport goods from the Kenyan coast. The third option is to focus on improving and upgrading the existing MGR system, and this could provide a more immediate solution for Uganda transportation needs. This could lead seeking seeking financing for rehabilitation and modernization of the existing MGR, as well as improving the efficiency at the port of Mombasa. So this is still an option, but a short-term option, because the MGR, as we know, is not efficient, and it might not operate at optimally. So Uganda still have some options, and ultimately the choice of which option this country will pursue will largely depend on a range of factors, which include financing, its availability, the political consideration that will be made in the country, and also potential economic benefits of each of these options. So thank you for watching this video up to this point. If you have not subscribed to this channel, I encourage you to do so. You can also watch other videos that you have done on this topic and other topics. Hit the notification bell so that whenever we upload a new video, you are notified. Thank you.